This is going to be a introductory video into UK banking stocks. The reason being that I've decided to invest into some UK banking stocks. But before I start this video, please remember that I do these videos just for fun as a hobby and always speak to a qualified financial advisor before making any investment decisions. So what first got me interested into the UK banking sector was the sector graph looks really good for me. I really love investing into sectors where they're completely bombed out, and that's certainly the case for the UK banking sector. Also, what took my interest was that back in the glory days of the early noughties, we used to have 5% plus interest rates. And this 2 decades here of being in the doldrums correlates with us having zero interest rates. So it doesn't make sense to me why the share prices haven't responded to the fact that we're now back up to 5% interest rates, particularly when you consider that the banks are in a lot better shape than they were back before the credit crisis. Indeed, the price to book of all the banks is very low, so they do look undervalued there. And from going through their financials, they're making just as much as they were back here. So with these higher interest rates, why haven't the stock prices gone up? So to me, it's possible that it is a really hated sector and it could be a good opportunity when the market catches up with reality. Now, I know that there's talk of interest rates going down, but they're not going down by much, with the current consensus for 2025 being still 3.75% and 2026 being 2.75%. So I do find this sector chart here very interesting. Plus, if we look at the long-term interest rates, we see that actually what happened over the previous 2 decades was the anomaly. It's much more usual to have high interest rates. And if you go and look at the video I did on the UK macro situation, I do think that there is quite a probability that with all the fiscal indiscipline going on and inflation risks, I think there is a good case for long-term high interest rates being maintained. And I took a look at the accounts of some of the banks, and it is quite clear that higher interest rates do lead to higher profitability. So to quickly summarize, the sector chart is totally bombed out and banks are long hated by investors, making this just the kind of thing I want to invest in. The banks are very profitable and doing large share buybacks and paying out good dividends, and the prices don't seem to reflect high interest rates. I've took a look at the financial data of some of the banks, and it does confirm that they really are making more money because of the higher interest rates. And those banks are a lot more stable than they were back in 2008. Plus, because of digital technology, it's a lot cheaper to run a bank now than it was back in 2008. So why is the sector chart still down here? It doesn't make sense. And then there's a bonus ball here that I think that blockchain technology, which will be rolled out in the coming decade, really could multiply future profitability because the governments will make sure that only people with a banking license are able to act as banks. And I think they're going to be positioned in a really favorable place to make a lot of money out of blockchain technology because it will make the banking system a lot more efficient. What am I betting on when I invest in bank stocks? It's a bet on the recession ending and then having normal or strong future GDP growth. And it's also a bet on interest rates remaining elevated, which is the historical norm. So I compiled a list of all of the UK banks that I could find. And if you want to get a copy of that list, plus this other stock filter that I did, you can get them on my Twitter. My Twitter handle is Mark Alpenblick. So you can access these here and then look into the detail to your heart's content. But just to highlight a few of them, HSBC Holdings is the largest bank in the UK. It's actually the third largest stock in the FTSE 100. But I found out that half of their income comes from their businesses in China and Hong Kong. So I found that far too unpredictable and risky, really, for my interest. The next two banks that are listed, they're actually secondary listings on the FTSE, but they're actually the second and third largest banks in terms of market cap. These are Banco Bilbao and also Banco Santander. But the first one of those I couldn't actually get on my trading platform, and Santander, well, 27% of their income comes from Brazil, and I've been hearing a lot of bad things about Brazil lately, so that wasn't of interest to me. So then we have Lloyds, Barclays, and NatWest, which are obviously three high street UK banks, and they got through quite easy. They got through this initial filter quite easily. And then we have a whole load here, which I've detailed the reasons here why I wasn't interested. So you can go onto my Twitter account if you want to dig into that detail there. Then after eliminating these three, it just left the Bank of Cyprus, Arbuthnot Group, and the Secure Trust. So here then is my final shortlist. Now, Arbuthnot Group are a interesting bank. They're actually entirely a private bank. They're kind of a posh affair based in London. When I started digging into their numbers a bit, they weren't really all that inspiring to me. And so I've decided to eliminate them from my shortlist. And Secure Trust, it turned out that actually most of their income, unsecured lending when people buy stuff online, or also car financing. So those do not look very attractive to me. So that leaves these four here. Barclays and Bank of Cyprus do investment banking, but all four of them do retail banking and commercial banking. When I started checking them out, Bank of Cyprus actually looked very good, and I've actually already bought shares in Bank of Cyprus. The main reason being that actually they pay this enormous dividend, but the ex-dividend date is next week. So I thought I'd step into this trade of investing in bank stocks, taking advantage of the fact that by buying before next Thursday, you essentially get a double dividend. You kind of get two times the dividend for the price of only owning them for the first year. That then leaves me with Lloyds, Barclays, and NatWest, and I plan to buy two of those three before the end of the year. I'll be putting 10% of my over portfolio into this banking stocks idea, but I kind of want to spread the risk a bit because of all the geopolitical uncertainties at the moment. Currently, Lloyds and Barclays are my favourite, and the reason being that is that when you look at their net income history, they were both solidly making money even in 2020 and before then. Whereas with NatWest, they're all a bit lackluster until only last year. And also, although they're paying a bigger dividend and massive share buybacks, I'm a bit suspicious of this dividend because it turns out when I looked into them that this massive share buybacks in the case of NatWest was because the government was selling some of its shares in the company, and so they were actually doing these share buybacks directly off the government. The government still owns 35% of NatWest, and it's actually been signaling that it wants to sell all that over the next few years. You can see how this also affected its capital ratio, which is worse than with the other two banks. So I do find NatWest a little bit problematic, but I'm going to have a good look at all four of these, and you'll be seeing some videos coming out in the near future. Something else I'll point out is that if you look at Barclays' share price since 2008, you see that it's actually been in this descending triangle for well over a decade. And you see that it's actually threatening to burst out of that triangle, which I think would be very bullish. And also the same for Lloyd's and the same for NatWest. So that completes this introductory video, and there's going to be a lot of stuff coming up about UK banking and how I think UK banking stocks could be doing very well out of the fiscal indiscipline of the UK government, which I think may keep interest rates up. Like I said, I'm only a third in, and I'm going to try and pace the purchases over the rest of the year whilst keeping an eye on the macro situation. Please remember that I do these videos just for fun. I really do enjoy learning about these different stocks and vlogging my investment journey on YouTube. But remember, I do it just for fun, and make sure you speak to that financial advisor. Speak to you at the next video. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.